Hello, everybody, and welcome back to Zach's Live Trader. I am Dave Bartosiak. We just got done talking Apple, and I ate an apple, so now I'm fired up. And we're going to talk about Tesla, because Tesla's going to be reporting after the market close also. So I wanted to get in here, dig in, make sure you guys had plenty of time to put a trade together and have a look, and go from there, see if we can't make a couple bucks on this thing, okay? Now, remember, questions, comments, concerns. If you want to figure out, hey Dave, what's this whole Zach Live Trader thing? When's a premium feed gonna come? And how do I get access to your sweet video that you do on Thursday nights detailing the positions and how you get out of them? Huh. Email me, livetrader@zax.com. Any questions, comments, concerns, just try to be nice, okay? Be nice. Duh. Apples. Now Teslas. Tesla. There's been so many times I've been so very bullish on shares of Tesla because anybody who's been to a racetrack knows you don't bet the horse, you bet the jockey. And when it comes to Tesla, that's one of the best jockeys around, man. Elon Musk. I mean, the guy is a modern day Iron Man, right? He's awesome. He's brilliant. He's trying to make a ton of money, obviously, but make the planet a better place. I think that's certainly a thing that he's trying to do. But I don't really care about that, right? I mean, I do, but when it comes to stocks, like, I want you to make money. Like, you can have your, you can save the world and do all that. What are you doing for the shareholders, though, Mr. Musk? So a lot has been said about Tesla. I've been bullish on it in the past. And a big reason was the Model 3, right? Because this is going to change everything. This is the Henry Ford moment. This is going to be the affordable electric car that everybody and their mamas can have, right? So that's kind of the dream, right? Which is fantastic, unless, you own a gas company or something like that. But it's good. So they've developed sort of a cult following, okay? And I know some of you guys are out there, and you're the Tesla guys who are part of that cult following. So, not here to offend you, okay? And if you're mad about it, too bad. We're talking about how to make money on this options trade here in this earnings season, okay? So I want to be very clear on what I'm going to say here. This in no way, shape, or form represents any sort of long-term view I may or may not have on Tesla, okay? We're strictly talking how to play this earnings report, okay? Now, as always, I dig into the price consensus and EPS surprise chart on Zax.com. I take a look at the detailed estimates page on Zax.com, and then we look at Yahoo Finance to dig into the options chain. There, I take a look and try to construct a bullish trade and a bearish trade, and then give you my humble opinion as to which one of those I believe is the best idea, okay? It's about education. It's about learning about options, right? It's not about me being, the second coming and giving you perfect ideas 100% of the time. It's not going to happen, okay? All right, so now let's look at the price consensus and EPS surprise chart here on Zax.com. If you take a look at the black line, that represents the price corresponding to the right y-axis. If you look at these little arrows, the red arrows, earnings misses. The green arrows are earnings beats. These multicolored lines represent the evolution of our Zax consensus estimate over time. And herein lies the rub. So, Tesla went bonkers 2013, 2014. What else do you guys notice here with Tesla? Earnings growth. Hopium here. So you start believing this hope, which is great, and what happens is these multiples expand. So you're willing to pay a bazillion times earnings, right, for the stock price, because you don't care, because you're like, yes, they're going to make so much money over time. It's going to be huge. I don't care, okay? But it's been Chop City here for the better part of, 2 years almost, right? Just chop it. Chop City. We've got a lower low here recent. Look at the lows. Swing and a miss, swing and a miss. Is this the Dodgers lineup? Swing and a miss. Oh, 4 in a row. Down. But this is crazy, okay? If you look at February's earnings report, they totally miss. Swing and a miss, right? And the stock goes bonkers. Bonkers. Why? Because Elon Musk is a fantastic CEO. He's a rah-rah guy, right? So even if Tesla comes out and has a terrible quarter, he's going to be like, hey, man, don't worry about this quarter because, like, next quarter is going to be great, right? So, but you have to be excited about this, right? He kind of keeps you steering in the right direction and lets you know that, okay, this report, we're not really worried about this, you know, but there are a few things that people are worried about. How about the whole Solar City thing, right? You acquire Solar City, left a lot of people scratching their heads. Like, why would you take on another company that's got negative cash flow when you've got negative cash flow? Although Solar City, I hear, is on the verge of kind of turning over, right? Turning positive and actually making some money for Tesla. So that would be good. So Elon could be, maybe he's a genius. Maybe he bought it really low and it's going to help him out later on in the year. That may be some of the things that he talks about on the conference call. So something to look out for. But don't take my word for it. Let's take a look at the detailed estimates page here on Zacks. See what the other people have to say. Zacks ranked number 4, sell. Value, F. Well, duh. Could have told you that. When your PE is NA, that's not good, right? Well, it could be. It just means that you're not making money. Growth, D. Momentum, D, for a VGM of F. So we've got a 4F. So in the Zacks world, it's not so nice. It's not so nice. So this is after the close tomorrow, but I didn't want to wait till 1 o'clock and have to come back in here again. So we just did it right after the Apple feed. So there you go. You're welcome. So what are we looking for the current quarter? Okay, let's just look. 64-cent loss, right? Next quarter, 85-cent loss. So that loss is widening for those keeping score at home. The current year numbers, look at this. 90 days ago, they thought they were going to lose $2.33. Now, oh, you got Solar City there? You're going to lose $4.15. Next year's numbers from a $1.51 loss to a $4.56 loss per share. Okay, and that's really only one analyst that came creeping down here, right? So that's essentially one guy getting super negative. Now, the industry we have this in is in the bottom 29% of our Zacks industry rank, okay? Because as much as we'd like to say that Tesla is just a company that's just totally changing the game, they're still selling cars. They're still in the auto biz, okay? Granted, it's a little bit more insulated, but I think Mercedes is going to have a good chunk of their fleet available as an all-electric within the next year. I do love the autopilot thing that's going on at Tesla, not just in their cars for regular, everyday people, but I just saw that the first Tesla truck delivered a load of beer 120 miles. And I like beer, and I think you may too. So that's a good thing, right? Robots delivering beer can't be bad. What else does Tesla have going on? Of course, the Model 3, right? How are you going to ramp up production on this Model 3? When is it going to come? I know they kicked the can down the road a little bit, but that's what they do. They set very aggressive targets. They disappoint. And then they talk about something else, right? Which, again, I'm not being negative about it. It's just, it is how it is, right? This is what they do. Elon Musk is known for being very aggressive and setting these goals. Like, hey, we're going to get this done here. Everybody's like, you're crazy. But that's way better than setting the goal way down the line and then disappointing that. So at least he gets aggressive. He tries to get him going. It's good stuff. I actually like the way he does that over there. And again, I am an Elon Musk fan. He's kind of cool. All right. So let's look at the live options chain here on Zacks or Yahoo Finance. 4 shares of Tesla. Trading at 203 and change. So initially, I like to look at the front week. So October 28th. And let's do some math, okay? So what I do here is I like to take a look at the at-the-money call and the at-the-money put to give me an idea of the implied volatility. So in this case, that's looking at 202.50. So again, I'm not trying to be the fanciest guy to ever calculate implied volatility. Just a quick little calculation. 667 is the cost of the call, plus 612 being the cost of the put. Add them together, and what do you got? 1279, folks. 1279. Now, divide that by the current strike price that you're looking at, whichever one that was, 10 or 202.50, right? And you're talking about a 6.3% move that we're looking at for Tesla, okay? So with a stock at 202, we're essentially thinking that it trades somewhere between 190 and 214, right? That's kind of, so let's see what kind of options we have. So 240, I call it 215 and the 190. So this is the sort of realm that we're talking about, right? Okay, now, as always, while I like looking at the weekly, okay, look at some of the numbers on the open interest on this weekly. So this is essentially the liquidity available. So we got a 2,400 contract, 2,000, 1,000, 2,300. So that's pretty healthy, right? Over here, 1,000, 1,000, 1,000, bang, bang, all day, right? Keep that in mind, because right now I want to go ahead and look at what happens. Cue the Wyclef. Gone till November. November 18th. Now this is a weekly, this is a monthly contract. Once this loads up, I believe you're going to see some bigger numbers here. And you do, okay? We do see bigger numbers. We see 5,200 contracts on the call. Ooh, 5,200 on the puts too. At $200. 1,100 at 205. 2,500 there. 2,200 there. So we got some big stuff going on. I want to see if there's any huge number further out of the money. I like to look at that 3,500 at 250. Wowzers. Okay. 2,600. 1,500. Okay. All right. And if you notice, there's a lot of meat out here, man. There's a lot of premium out here, okay? Further out. So this is what I want to try today, okay? A strategy that I've used before that's worked pretty decent before. So in the Apple trade, the numbers just kind of worked out, and we put together a put spread and a call spread that worked just fine, right? Or we hope is going to work just fine. In the case of Tesla, I feel like there's a lot of implied volatility sort of right at the money, and then you get a little further out and it kind of sticks around, okay? So there's odds of like a larger move in Tesla here, I think, as you're looking out, right? Now shares have been kind of right at this $200 level for a while, and even if they spike, they kind of give up and spike and give up, and that's kind of what we're doing. I almost feel like the market thinks that Tesla's worth $200 regardless of what the EPS comes in at, right? So I kind of want to keep this in mind, but I don't think I want to be long a call spread or long a put spread on this. I think I want to get on the short side of each of these. So a bullish trade that I would put together, I think, is going to be short a put spread, right? But I'm going to go a little bit out of the money on this. So remember, we had this 190 as sort of the bottom end of what is being priced in right now, okay? So let's see how 190 looks. So even at 190, I keep doing it. The fat finger strikes again. Uh-oh, now I blew this up. Stop. Okay. There must be some button I'm pressing. 190s. These 190s. are $4.70. Okay. And then the 185s are $3.50. So I want to investigate this if I'm bullish on Tesla. So what does this look like? What does this entail? What does it even mean? Okay. So what this means is I'm looking at selling the 190 put if I were bullish on Tesla. So essentially what I'm saying, if I take this stance, is that, you know what, Tesla's not going to go below 190. I don't even think it has to go up, but it's just not going to go below 190. So this is a trade I would put on for that. So obviously your payoff is going to be a little bit less here because the likelihood of it happening is a little greater given the current price, okay? So if I'm bullish on Tesla, what I can do is I can sell the 190s for $4.70, right? But I don't want to have this sort of unlimited downside risk, because if I sold the 190 and Tesla goes to zero, right, I'm going to owe 190, $190 times, 100 on times each contract I put on. That's a lot of money. I don't want to do that. So in order to mitigate that risk, I'm going to buy the 185 puts, okay? So this way I can clearly define my risk on this trade. So I sell the 190s, I take $4.70 of premium, and I put it in my pocket, right? Now I buy the 185. So I'm going to subtract the 185 price, which is $3.50, meaning the total amount of money I'm going to take in on this trade is $1.20. All right, now the amount of money at risk is going to be the difference in the strike prices, which is $5. But somebody is going to pay me $1.20 for this, right? So 5 minus $1.20, $3.80. So my risk is clearly defined at $3.80. So my potential return on this is like 31.5%, okay? Not bad. 31.5%, short 190, 185 call spread for a net credit of 120. So that's if I'm bullish on Tesla, right? Okay. Now, if I'm bearish on Tesla, I'm going to do the same thing in the opposite direction, essentially, right? So if I'm bearish on Tesla, so remember we were thinking 214 to 190 is the range. So let's look at 215 then. Makes sense. So the 215 to be the short side of our spread. And then, well, you know what? Give me that back. Thank you. Okay. So 215 and conveniently enough 220, right? It's right there. So if I'm bearish on Tesla, I'm essentially saying, yeah, Tesla may go up. It's not going to go over 215 though. Like, it's not going to run that far. The options market's not pricing that, and I don't think so. So what you want to do is you go kind of out to the edge of that range and then sell that, right? So this is very similar to how we end up putting on that iron condor, but you only put on that iron condor if you are pretty sure that thing's going to bounce around in between those two levels, right? Like we did with eBay kind of thing. Well, we wanted to, right? Bounce around between two levels. But you can be directionally biased by just doing one leg or the other, one side or the other, right? It's like an iron condor, but you cut off one of the wings, right? Tin snips, just boom, down. Iron condor down. So this is what we're looking at. So I'm going to dig in here and I'm going to short the 215. I'm going to take in $5.76 of premium. And then the 220, I'm going to buy. It's going to cost me $4.46. Again, same way, this is how we limit our risk. Okay, folks? So $1.30 is what I'm going to take in. So $3.70 is going to be what I'm going to have at risk. So again, I can get 35% here. So again, $1.30 net credit, right? $3.70 at risk. And that's short the 215 220 call spread for November 18th. Okay, so with regards to Tesla, the cult stock. Awesome. My favorite. I love it. Elon Musk, you're my boy. Am I bullish or am I bearish coming in earnings? That's the sound a bear makes, ladies and gentlemen. I got it right this time, so that's good. The reason being, there's a lot of moving parts here at Tesla trying to get these factories up and running, trying to make sure they got the money, making sure they didn't screw up the Solar City thing, all of that, okay? And I also want to clarify here, by being bearish on this earnings report trade does not mean I'm bearish on Tesla, okay? I just feel like there's money to be made selling this 215, 220 call spread. That's it. Call me a capitalist. Just don't call me late for lunch. Ha ha! There you go. So, again, guys, I don't really know what we're going to be doing the rest of the week. But when it comes to Tesla, we're going to be gone till November 18th. And later on in the week, I'll let you know what else we're looking at. Actually, today, this afternoon, I'll give you shoot you an email. Again, if you want to get on the distribution list, live trader at Zacks.com. Check out Zacks Live Trader on YouTube. You can see our premium feeds that are behind the paywall that nobody gets to see. Plus, you get to know that I'm going to go ahead and send out every Thursday to give you a game plan on those expiration Fridays, so you have it all together for you there. Again, live trader at Zacks.com. Shoot me a quick email. In the meantime, I will see you guys sometime later this week. Have a good one. Take it easy.
I can't work a 9 to 5, so I'll be gone till November. Said I'll be gone till November. I'll be gone till November.